All right, so in this swing trade recap video, this is actually going to be a different kind of video. I'm going to be breaking down two swing trades that I did with my team, but I'm also going to be tying in psychological and risk management stuff as well. Okay, so real quick, the two trades that we took that I gave to my team last Friday, we sold for really nice profits this morning, were SPY 1223 expiration for 60 puts, and then Apple 1223 expiration 170 puts. Both positions opened up easily in the money for us this morning. We're basically swimming in profits. Both trades were also small account friendly trades. I also want to throw that in there. Okay, so real now shifting gears a little bit, I want to talk about something that's really important um, as a trade or from a trading mental standpoint. Simplicity. Okay, simplicity is key. You know, a lot of us have heard simplicity is key throughout our lives. I'm sure this is not the first time that you've heard this, but you maybe have never heard it before in regards to trading. Okay, well, it is still very much applied to trading. And so when I say simplicity is key, it's about making trading as easy as possible for yourself. Okay, we all know how stressful trading can be. Okay, we all know the mental battles that we go through, the mental frustrations, the greed, the anger, the lack of discipline, where you're scared to take a trade, all that good stuff that goes into the mental mindset of a trader. Well, to help alleviate that, you want to make your trading as simple as possible. And sometimes that can mean only taking those A++ setups during volatile market conditions. Okay, there's no doubt about it. We have seen some extremely volatile market conditions. 1 to 2 days, the market is swaying to the downside. And then another day or two later, it's done the exact opposite move back to the upside, and then vice versa. It's a nonstop cycle as buyers and sellers continue duking it out at these key support and resistance levels. Okay, but first, before I circle back into the mental game of this, I want to break down these two trades that I did with my team from a TA perspective. Okay, and it's really clean cut and simple. SPY. Let's look at SPY first. We have the rally from Powell right here from last Friday. The market rallied off of FOMC and what the Federal Reserve Chairman Powell said. Of course, Thursday they lay the trap. Okay, this was a very mentally deflating day for a lot of people in the market, myself included. Okay, a lot of people went long overnight, myself included, along with many people on my team. This Thursday erased a lot of long positions. Okay, it really was a big day of screwing over retail, all that good stuff. Mentally deflating day. This was the flagpole for what eventually transpired leading into this morning. Okay, notice what price action does Friday for us. Okay, price action gaps down a little bit, but it puts itself into a bear flag. Here is your flag pole, and here is your bear flag. For every flag out there in the stock market, whether it's a bear flag or a bull flag, it has to have the flag pole attached to it. Okay, here is the flag pole. Here is the flag itself. Now let's look at the price action from Friday alone. Here is a nasty rejection during the 11 a.m. candle. And now here, look at the 2 p.m. and the 1 p.m. candles. It is a double top off of 463.70. Price is still trading when this 2 p.m. hourly candle closes. Price is still trading inside of this bear flag. Look how this 3 p.m. candle closes. They execute on this bear flag heading into close. SPY had a very bearish close on Friday. It sold off with a lot of volume. Volume is key. If there's selling pressure, if there's a lot of selling and it has volume, that is something that is very indicative of what is to come in the future. Notice this 3 p.m. hourly candle and look at the volume that came with it. Okay? Price executed on this bear flag heading into close. Well, now let's flip it to Apple. Here's Apple's TA setup, and look how similar these two setups are. Here is the rally post Powell and FOMC from Wednesday. Just like the S&P, or just like what SPY did on Thursday, notice how it erases all of its gains. Here's the flagpole being formed. Now this isn't as clean as SPY's, but it is still there and it's still valid. Here is the bear flag that Apple prints all day Friday. Now, the difference between SPY and Apple has a lot of technical rejections. SPY gave one technical rejection, and it was the 11 a.m. candle on Friday. Apple gives 3 rejections off of technical resistance. So both SPY, here is SPY's hourly chart again real quick, and here is Apple's hourly chart. Price action for both is trading below all 3 key EMAs. Okay, when price action is trading below those EMAs, that means they are technical resistance. Notice over here, they're technical support. Price action buyers are able to use them to be able to step in, to get in control of price action, and then to take price a leg up. Okay, here it is where sellers are sitting at price or at technical resistance. In this case, the 21 EMA, and they're waiting there and they're pushing price down, and there's a lot of selling pressure sitting at the 21 EMA. Look at the 3 rejections we get. We get one during the 11 a.m. candle, times very well with SPY's hourly rejection at 11 a.m. as well. And look at the 2 p.m. and the 3 p.m. hourly candle. 3 rejections off the 21 EMA. Now, when the 3 p.m. hourly candle closes on Friday, Apple has a very bearish close. It has a volume, it's sold off in the close, but it's still trading like right in line with this bear flag. It almost closed out of it. It closed right on the support trend line. So you can make the argument it closed out of it. You can make the argument it closed on it. Either way, still a very bearish close. Now compare that to SPY. Okay, both SPY and Apple had a very bearish close, and they were both presenting the same TA pattern. They were bear flagging into close on a Friday before the weekend. Okay, Friday's close can sometimes be an indication for how we open the following week. It's not always going to be, but what it can tell you is the close for Friday is how it can gauge investor sentiment. Okay, you can tell the confidence of people. Are they confident to hold over the weekend? Because nobody wants to be shocked by bad news over the weekend. If if a stock or the markets in general sell off into close on a Friday, that tells you that people are scared to hold over the weekend. Well, lo and behold, look what happens this morning. We get a big gap down. But now that we looked at both setups from a TA perspective, real quick, I want to reiterate again. Both of them are bear flagging, okay? Now let's think about it from a fundamental aspect a little bit. Apple is the #1 weighted name in the S&P 500. How simple is that? Remember at the beginning of this video, I talked about simplicity. The tech sector is also the largest sector in the S&P 500. So of course, Apple's price action matters. Okay, Apple's also the #1 tech name. It has a market cap of what, 3 trillion, just under 3 trillion. Microsoft took the lead for a little bit, but Apple quickly came roaring back. Okay, now diving into more psychology. A lot of people struggle with swing trades. Okay, in my opinion, the easiest way to grow an account through option or through trading options is to swing trade options, because you can get very high rewards because you get into a move very early and then you sell your contracts back after you capitalize on a big move. So many new traders are infatuated with learning how to day trade Apple, or not Apple necessarily, but Fangman names such as Tesla, Amazon, Shopify, and Nvidia. Okay, all these large cap stocks, they're very volatile. In my opinion, the safest way to manage risk and to safely grow your account through trading options is to swing trade them. But a lot of people get caught up on swing trades. Okay, it can be hard to find good swing trades. Okay, if you're going to take swing trades, especially during these volatile market conditions that we've been seeing the past few weeks, you need to focus on high probability setups only. Now, what does that mean? You should be focusing on confluences. Confluences separate those 50-50 setups from those 90-10 setups, okay? 50-50 setups. 50% chance they work out, 50% chance they don't. Terrible risk to reward, okay? You don't want to take a 50-50 trade unless you can fully accept the risk that you are putting on. I personally love those 90-10 setups, okay? Now, nothing is ever guaranteed in the stock market and in trading and investing in general. If anybody is telling you that, you need to stop listening to them right away because they are lying to you. Nothing is ever guaranteed in the markets. But we can find those very high probability setups, and that's where the 90-10% comes in. The 10% is always the unknown factor because we will never actually know until price confirms it for us. But we can have that 90% certainty thanks to high probability setups. Okay? When you identify confluences in your trades, it gives you peace of mind as a trader. Now, why is that? Because trades or setups with with confluences, are high probability. Okay, high probability setups. Remember, nothing is ever for certain in the markets. But when you take those high probability setups and those high probability trades, it gives you a peace of mind because you know you did your due diligence. You have confidence in yourself as a trader. You have confidence in the way that you trade because it has been tried and tested. That is what helps you sleep at night as a swing trader. So you're not waking up every hour checking futures. You're not checking futures every 5 minutes on your phone until you fall asleep. I've been there and done that. That's a really shitty mindset to be stuck in. Okay? Why do we want peace of mind as a trader? It simplifies things for us. It's like a weight taken off of our shoulders that's been holding us down for forever now in our trading careers. Circle back to the beginning of this video. Simplicity is key. You want to make trading as easy as possible for yourself. These were two very easy, short setups heading over the weekend. These were the 90 to 10 setups. Okay, remember, the 10%. That is something that I cannot stress. Nothing is ever guaranteed in the markets. Okay, that is the 10% unknown factor. But let's look at the 90% rule real quick as I do another TA recap of these setups. Both SPY, which is the S&P 500 ETF, and Apple, which is the number one weighted name in the S&P 500, and it's the number one tech stock, and the tech sector is the largest holding in the S&P 500. Both of them are bear flagging on a Friday. Both of them have the same exact flagpole from Thursday, all day Thursday. Here is SPY's flagpole. Here is Apple's. Both of them are bear flagging all day Friday. Here is SPY's bear flag. Both of them show technical resistance and selling pressure. SPY shows the double top at 463.70. Apple shows 3 rejections off the hourly 21 EMA. Both of them show a very bearish close with volume. Remember, volume is so key in confirmation. Both of them sell off into close with volume. That is about as high probability as you can get. Bearish confluences lined up together between these two trades. And after we identified this setup, all that was left to us to do was just execute, just enter the position. Okay, manage risk accordingly. These were the 90 to 10 setups. Okay, they don't come very often, but when they do present themselves, and when these opportunities do come for these 90 to 10 setups, this is the time to execute as a trader. We woke up to really, really nice profits this morning. These were the kind of trades that can flip an account. Okay, 200% profits, 40 to 50% profits. These were the trades that make small accounts grow. All right, if you have any questions for me after watching this video, feel free to DM me on Instagram, Father Time Trades, or you can DM me on Discord. I'm going to put my server link in the description below if you want to join. I have built my server for new traders out there and for traders who are struggling to grow their accounts. Or you can also drop any questions in the comments below and I will get back to you as soon as possible. Take care.